Hello, welcome to this webinar. Crowdsourced funding for small proprietary companies presents opportunities to both small, medium enterprises and also accountants. Hi, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome. Wanted accountancy firms committed to crowdsourced funding. This market's not for everyone. We're not trying to promote this product package to 10,000 accounting firms in Australia. We think the market's maybe for about 1,000 accounting firms, and that's what we're very happy to make this presentation to you to give consideration to. Do you want to be part of the 1,000-odd firms who can make a difference to small, medium enterprises by helping them to get ready to be able to raise capital as a small proprietary company? This is brand new. No accountancy business has an historical advantage other than perhaps from around February 2018 when you had to be an unlisted public company. You don't need that any longer. The law has been rationalised to enable small proprietary companies to be able to go through the process and raise capital from the public. Now is your opportunity as an accountancy business to service your clients, to help those who wish to take advantage of this new opportunity, but also to create a new income stream for your accountancy business, to offer interesting and exciting work for your clients. Don't miss this great service diversification opportunity. The accountancy profession for years has sustained itself by the federal parliament making changes in taxation laws, which have required accountants to give advice to clients. But in this case, it is not taxation laws that have been changed. It's this whole new opportunity to offer real commercial services to your clients by assisting them through this process, which is very similar to preparing a prospectus that a public company has to go through. So who's this legislation targeted at? It's targeted at small, medium enterprises and inventors. Inventors who are too big, too old to take advantage of early stage innovation company. Who are the traditional accountants for small, medium enterprises in Australia? They are small to medium-sized accountancy firms. Accountancy firms situated in every suburb, every town, every city across Australia. I assume most of the people watching this webinar are representatives of small to medium-sized accountancy firms. So if the clients are your natural clients, don't encourage them to go elsewhere to get advice when they're potentially looking at one of the most exciting things they will ever do in their business careers. Offer them a great service. Don't send them elsewhere. Don't sit back and think that all you want to do is the taxation return, please. I would urge you to motivate your team to be able to offer a wider range of commercial services so that you retain these clients while they start on this very interesting journey, the journey of capital raising. From your point of view, you can create a new income stream. Is the company that you're looking at a potential crowdsourced funding company? Well, let's have a look at it. Why not analyse your clients? Phase 1 is the legal tests that have to be met. And phase 2 is some subjective tests that we have prepared that we think will assist you to identify clients in your firm already and prospects who could be eligible crowdsource funding companies. So the legal test, first of all, group turnover or sales under $25 million per annum. Pretty simple, $25 million. And the value of group assets less than $25 million. It's a bit of a magical figure, isn't it? $25 million. The company cannot be listed on a stock exchange anywhere in the world, neither can any associate subsidiary company be listed on a stock exchange anywhere in the world, and the company and its associates cannot be included on a financial market outside of Australia. The legislation says outside of this jurisdiction. So that's pretty clear. They're the legal tests. Now let's have a look at some subjective tests, because I think in a small, medium-sized accountancy firm, a large number of your clients probably fit that legal requirement. Under $25 million sales, under $25 million gross asset value. But I'm not going to suggest that every one of your clients is potentially interested in crowdsource funding. But let's go into it a bit further. First of all, there is no industry restrictions. They don't have to have developed a new widget or a new smartphone or a new scientific formula or developed some sort of new plant. They can be from any type of industry, and there's no age specified. So they can be a brand new startup or someone that's 95 years of age as a company. And unlike the early stage innovation company, ESIC, which had a prime objective of trying to locate companies that are under 3 years of age, and in some cases they could be up to 6 years of age, that doesn't apply for crowdsource funding. It's virtually every company in Australia, or you could spread it to say every business, as long as they agree to convert to a company in Australia that meets those key legal tests. But let's have a look at some more subjective tests, because I know you will want to try to narrow this down to get a group of 20 or 30 of your clients. Could be higher, of course. You might have 100 when you go through these subjective tests that I suggest you do. Who in your clients is an early stage, high growth, disruptive company? CEO's normally got a fairly strong personality, has a real desire to create something. I was talking to a colleague of mine about 3 months ago, and I said, what's your objective? He said, I want to be in the ASX top 200 within the next 2 years. I said, wow, what an objective. Have you got any clients like that? Because if you have, I'd be putting them down as number one tick as to who you should really be having a serious conversation with. Perhaps they can start their journey by raising some capital, utilising crowdsource funding. Or are they keen to expand their business or acquire another business? Or do they just have a vision for the business that they can package a good story together to be able to raise capital to then implement that vision? Think about it. Who have you got? Who's talked about wanting to expand their business? And I'm suggesting the vast majority, if not all of these companies, will require some funding to be able to implement their visions. Where are they going to get that money from? It's going to be very difficult to raise bank loans in Australia for the next few years. The banks have copped a bit of a pounding in the Royal Commission. I don't know if they're going to be keen to be out there lending money. Money's getting tight to borrow at present. Let's look at another opportunity that I think many of you have potentially got in your firm, but you mightn't have thought about it. And that's someone that would like to do succession planning. How many clients have you got who are approaching retirement age, who for years have just ploughed back every spare dollar that they made in their business back into the business. It became their superannuation fund. And they always said, oh, my business is my super fund. But they've suddenly reached 2018 and are looking around the market to see what their opportunity is to sell their business. And they might be feeling a bit dismal because there are thousands of businesses on the market for sale. And there are not that many buyers. So it's become very competitive to sell a business. But over the last few years, a family member, might be a son or a daughter-in-law or a son-in-law or even grandchildren, have come into the business. So the founder's starting to say to him or herself, wouldn't it be great if I could exit the business with enough money to retire on with some dignity and the family could continue to run this business? Well, crowdsource funding can help that be achieved. Crowdsource funding is a group of new shareholders coming in who may end up owning 20 to 30% of the business. But it might allow the succession to occur for the founder to be able to retire and to allow the next generation or skip a generation for grandchildren to come into the business. Now, they can always offer to buy back these crowdsource funding shareholders in 5, 10 years' time if they wish, and if they've accumulated enough money in the business. But in the meanwhile, it's allowed the succession to occur. How many clients fit into that category? I accept that they've got to have reasonable businesses and a will to want to do something like this. Let's look at a balance sheet review. How many of your clients have got loans, not first mortgages on property the company owns from banks, but borrowings that have been secured on someone else's assets, maybe the mother-in-law's or of good mates? Now, that can be all right to start with, but after a while, their mother-in-law might be saying to them, look, I want to go and retire and I want to go to the Gold Coast or the Sunshine Coast, and I need that money. Where's the company going to get it from? Well, one way of getting it might be to raise some capital as a crowdsource funding company and allocate shares to this new group of investors who, incidentally, you don't have to pay interest to, and pay out their mother-in-law. How many of your clients fit into that category? And maybe some of your clients have got high credit card debts, and the same scenario applies. Would the directors be interested in raising capital to pay these loans? And please don't assume that you know exactly what the answer to these questions might be. I think you owe it to your clients to put the question to them, to explain the situation so they clearly understand it. And I'd be looking at this as a wealth creation opportunity for your clients. Owning 100% of businesses is not necessary anymore. Let's start them on the journey of raising capital. Because according to the government's research and what has happened in the other countries that have embraced crowdsource funding equity raising, 6 or 7 years before Australia, New Zealand, UK, Europe, USA and Canada, there has been in those countries literal floodgates open of businesses wanting to raise capital, prepared to issue shares in their company. Maybe not forever, but to give them the capital that they need to create something in their business which will create wealth for them. Why not talk to your clients? Sit down and analyze your clients. And what about this category? Too big, too old for ESIC. Someone that's developed a new product, process or service. They're aged over 3 years, a company aged over 3 years. They're still a young company, but the legislation for early stage innovation companies has a significant bias towards companies over 3 years. Sure, companies up to 6 years can be involved, but there's all sorts of other restrictions. So 3 years is the prime group that the government's looking for. There's plenty of companies around Australia who are inventing new products, processes or services that have been in business for longer than 3 years. And because they're already doing some other things, they've probably got expenditure of over $1 million a year. And perhaps, and hopefully if they're surviving, their income's over $200,000 per year. But they may have developed a new product, process or service and now need to raise some money from somewhere to take it from the prototype stage through to the marketplace, the commercialization phase. Ever tried to negotiate with a bank to raise money for that process? Most bankers have never tried to do this, of course. They got no idea what's involved in going from a prototype to being in the commercial market. But there is an opportunity now for those types of companies to be able to do it themselves by bringing in some external investors. And they may grow further. They may ultimately want to do an initial public offer and go onto the stock exchange. That's great. But let's try to help them within the current accounting firm environment that they're in, rather than chasing them off to go to one of the larger accounting or consultancy firms, because you will then wave goodbye to them. You will basically not see them again. You will not retain the taxation work because they will be encouraged to have it done by someone else. So let's look at the capital raising opportunities. You can raise up to $5 million every 12 months if you're a crowdsourced funding company, but you don't have to raise $5 million. Someone rang me the other day and seemed to be quite concerned that they had to raise $5 million. That's not true. I don't know what the minimum amount will be, but it could be $10,000, $50,000. Some of that's going to depend on the attitude of the intermediaries, who we're going to talk about in a moment. But I would say, as a conservative estimate, $50,000 would probably be around a minimum sustainable amount to look at raising capital as a crowdsourced funding company. But the important thing is you can raise that in a number of tranches in a 12-month period. You don't have to raise even $5 million. All in one tranche, you could raise a couple of million, and preferably have already foreshadowed in your crowdsourced funding offer document that the client may well want to raise some more in a few months' time, especially if something else comes to fruition. So you're not surprising your investors. So with any of these companies, I hope that you're now thinking about, and how many have you got? Have you got 100? Have you got 50? Have you got 10? I would think most of you should have 10. And if you really start analysing your client lists, I'm sure there's more who I think you should be inviting in for a briefing seminar, and let the client start getting excited about this. And then saying to, yes, I want to know more, I want you to proceed. So present a seminar. I'm not suggesting you present a seminar for all your clients. Invite the people you've identified, 10, 20, 30. If you've got more than 30, I'd split it into 2 groups, to be honest, because you want to have a direct communication with the people attending. You've got to give them the opportunity to come up and have a talk to you over a cup of coffee or an ale at the end of the seminar if they wish. So if you've got too many there, that won't happen. So the checklist to identify your clients is very important. We've included the document to that effect within our crowdsourced funding product package. And there's something in this for you also, of course, because this gives your accountancy firm the opportunity to create new income streams. You remember the report that Deloitte produced about 5 years ago when they looked at digital problems that were likely to occur in Australia? Deloitte then wrote a subsequent report which analysed what they thought businesses should do, and they were targeting their initial comments at a group of businesses that included accountancy firms. And one of their key recommendations, there are only 3 of them, was create new income streams. Well, I can't think of a better new income stream for accountants at present. I know financial planning was the flavour of the month some time ago, but I noticed in Accountants Daily this week that 60% of you are thinking about removing yourselves from that financial planning market because of all the regulations and the licensing requirements. Well, there's no licensing requirements necessary to assist your clients in crowdsourced funding. None. The only requirement, I hope, is that you agree that you will subscribe to the ESS BIZTOOLS crowdsourced funding product package. But it's not a license. So the first thing your clients are going to need assistance with is an understanding of what this process is all about, and then being able to assist them to produce a crowdsourced funding offer document. And let's look at some of the other documentation that might go with this. Because you just don't sit down and prepare a crowdsourced funding offer document. To do that, the company's going to need a business plan, budgets, cash flow forecasts, a share price determination, a business valuation, an information memorandum. Now, what would you charge to do this work for your client? I've estimated that I think there's $20,000 to $40,000 worth of fees on what we have on that slide. You can write your own figure in. But that's additional work. You might also then have the opportunity of talking to your clients about providing a virtual chief financial officer service. Because if these companies are going to go to the market and raise capital, I think they've got a real responsibility then to ensure that accurate, prompt financial information is prepared at least monthly, that's available to a board of directors meeting, which will be meeting 12, 10, 8 times a year. And hopefully these companies are going to end up with some experienced directors on their boards who are going to be demanding accurate information being submitted to them, accurate key performance indicators, accurate budget updates. Now, the company can go to the market and employ a full-time chief financial officer, and we all know what that's going to cost them. And some of them will not need an accounting input at that level to keep that person fully occupied. So there will be a tremendous opportunity for accountancy businesses to be able to sit down and have a discussion with your clients who have now gone through a crowdsourced funding process to engage your services to supply a virtual CFO service to them. But the main role to start with is going to be advising your client on the crowdsourced funding intermediary role, understanding who the intermediary is and what their function is. There are 7 of them in Australia, appointed by ASIC. And it's a free market situation. Your client has the opportunity of selecting the intermediary they'd like to work with. And there will be different emphasis within the intermediaries. Just look at their websites. They're all different. And your client's able to negotiate a fee with them. And we have in our product package a checklist for determining who's the best intermediary for your client. What's your client think about when they have a face-to-face meeting or a telephone or Skype meeting with these people? What are they going to do for you? We now have the opportunity of raising capital as small proprietary companies. So the law has been changed a bit. And I don't know whether you've had the opportunity to catch up with the changes that were made on the 12th of September through this legislation. But proprietary companies still have their 50 proprietary company shareholder limit. The employee shareholders do not count in that 50 shareholder limit. But the crowdsourced funding shareholders have been placed off in a separate compartment of shareholders so that we end up with something like this. We've got ordinary shareholders, we can go up to 50, but then in employee shareholders, there's an unlimited number, obviously depending on how many employees the business has got. It's unlimited, and the crowdsourced funding shareholders do not come into the 50. Now, that's not how the legislation was when the then Treasurer, now the Prime Minister, first introduced it. Crowdsourced funding shareholders originally were going to be part of the 50. I don't know how he thought that was going to work when the maximum retail investor amount is $10,000. But that's been changed, and we've got these, in effect, three groups of shareholders now within a proprietary company that is also a crowdsourced funding company. But a proprietary company can still raise capital under Section 708 of the Corporations Act. So it can be an eligible crowdsourced funding company and also raise capital under Section 708. The legislation indicates that a crowdsourced funding offer must be made by the platform. The platform is the website of the appointed crowdsourced funding intermediary. That's the only place that the document can be placed where people can subscribe. Your favourite aunt can come to you and want to invest $100 in your client's company. They have to go and place the $100 via the platform of the CSF intermediary. And that's because the legislation requires that shareholder to be, whether it's for $100 or $10,000, to sign off that they have been made aware of the investment warning. Now, these intermediaries all hold Australian financial services licenses, and they're able to provide the crowdsourced funding service. So the crowdsourced funding offer document, just to recap, is in effect a de facto prospectus. And to prepare that document, you're going to have to ensure that the client already has those other documents that I referred to earlier, business plan, budgets, etc. Now, they might already be prepared, but in most cases they won't be prepared to the required standard that the intermediary will require. And the period that this offer can sit on the intermediary's website is a maximum of 3 months. And then it's got to be withdrawn. So the company's either raised the minimum subscription by then, or the intermediary has to give it back to the investors. So let's look at some of the main features. A retail investor can invest up to $10,000. And in typical government jargon, a retail investor is anyone who's not a sophisticated investor. And a sophisticated investor, of course, is defined in the Corporations Act. A retail investor can invest a maximum of $10,000 in a 12-month period with a company. So if someone wants to go out and invest $100,000 in 10 companies, they can do so, but they can only invest $10,000 in an individual company within the 12-month period. And they have a cooling off period. No questions asked. Full refund will be given if within 5 business days they change their mind and they decide they don't want to go ahead with that investment. The intermediary then has to refund that money that they have paid to the intermediary and destroy their share application. I was very surprised that the government's introduced this particular rule. I personally believe that every company that raises capital as crowdsourced funding companies should have to appoint an auditor, but obviously I'm not the government. And the government's decided in their wisdom that the figure will be $3 million, so if the company has raised from a succession of crowdsourced funding offerings or Section 708 offerings, when they're combined, if the capital raised exceeds $3 million, the company must appoint an auditor. That doesn't mean the company still cannot appoint an auditor even if they've only raised $500,000. And quite frankly, that would be my recommendations, because I think it's all part of accountability that the company's got back to the investors. So let's look at the opportunities for accountants. A high-value service for your clients, a commercial service, a new revenue line for you that will be high-margin work. It's strategic work. It's interesting work. This will add value to the services you're providing clients and will increase their loyalty, because they will be able to say, well, we grew and we wanted to get a bit bigger and we wanted to raise some capital, and our accounting firm were able to do this with us. They grew with us. They supplied that service. Let's look at what you might be able to earn. And I know it's not mightn't be the sole motivation for what you do in your professional careers, but it always helps to know what's involved, because we're going to ask you to make a payment to us to access our product package. So let's look at what you might be able to earn from offering these services. I've sat down and done the costings. The advice on the crowdsourced funding operations, the eligibility and defining the intermediary's duties, I think is a fee of $5,000 to $10,000. And that might be all you get out of it, but $5,000 to $10,000. Now, our recommendation is you do run a free seminar webinar to start with, after you have gone through and done some identification on who you believe the potential clients who might be interested in crowdsourced funding are. I wouldn't charge for that. But once they have sat down and commissioned you to start explaining the whole process in detail, you could start sending them bills. And obviously it needs to be part of the engagement so that they know what potentially they're going to be up for. But let's look at some of the other items that we've talked about today. Preparation of a business plan for this type of company, $10,000 to $30,000. Probably depends whether they've already got a business plan that only needs some tidying up. Preparation of budgets and cash flow forecasts for the next few years, $3,000 to $10,000. I suspect a number of these company directors are going to need some mentoring on what corporate governance is all about. They will not want to be embarrassed by being on a board that has now got one or two other people on the board who have got some exposure in other companies. So why not present to them a corporate governance mentoring session, which we have within our system also, $2,000 to $10,000. Preparation of the offer document, $5,000 to $20,000. This is the key document that the intermediary has to sign off on. And then the virtual CFO services that you might want to provide, $10,000 to $125,000, depending on the engagement. And what I haven't mentioned in there, I've just noticed actually, is the share valuation and determining the price of the shares. Could be another $5,000 to $10,000. I think there's a significant amount of work there to encourage you to look seriously at this. I don't believe, though, as I said at the beginning, there's going to be enough work out of this new income opportunity for 10,000 accounting firms in Australia. But most definitely I believe, and I'm going to show you the figures in a minute, produced by one of Australia's most reputable professional firms in this space, I think there's going to be enough work for 1,000 accounting firms if you're serious. And especially if you combine it with early stage innovation company and perhaps now some Section 708 awareness, because the marketplace is going to be far more aware now. The small, medium enterprise market is going to be far more aware of the opportunities of being able to raise capital. I think you've got to go with them. I hope you agree with me. Let's look at what Enable Fundings had to say. Now, Enable Fundings had an interesting history. They've had Australia's first crowdfunding platform from way back in 2007. They were then known as ASOB, Australian Small Scale Offering Board. They were based on the Gold Coast. They've now been taken over by a company based in Adelaide, the directors of which are people experienced in a whole range of capital raising, a number of them Australian expatriates that have returned from overseas to set up this company. ASOB has helped 176 companies raise $148 million over that period of time. On their website, Enable Funding have 30,330 exclusive members. I believe that's jargon for potential lenders. So they've already got a significant investment base. And I'm told so do the other 6 intermediaries. This is just one intermediary because Enable Funding have published this information. Now let's look at their forecast. This is the most experienced crowd forecasting company in Australia. In 2016, $119 million would have been raised primarily out of early stage innovation companies and Section 708 company raisings. And these figures might all be 1 year out, but I've taken them direct off the Enable Funding website. Now, why they might be 1 year out is the government's taken probably a year longer than what was expected to get the legislation to where it is now. So their forecasts were in 2017 the market would go to 210 million. 2018, which is probably 19, 420 million capital raising. In 19 to 688 million. In 2020, they said probably 2021 a shade over $1 billion. And in 2021, probably 2022, $1.5 billion. My estimate is the average raising will probably be around $300,000 to $400,000. This will represent somewhere around 3,500 to 5,000 companies a year who are raising capital. Is it worth your while in getting involved? I think it should be, because the market might be a lot higher. I haven't seen what the other intermediaries are forecasting the market might go to. Could be very interesting. So in summary, Enable Funding is forecasting a tenfold increase in just 5 years. So why not plan to create a new income stream out of this new market for your clients? This is a great opportunity for some of your clients to go to the next level. Creates new revenue opportunities for your firm, for proactive accountants. So let's look at the crowdsource funding product package that ESS BIZTOOLS has produced. We already had a package in our system which covered the unlisted public company scenario. We've completely rewritten that because the legislation required us to do that. So we've got articles and forms to guide you on the process. We've got promotional and marketing material that includes material for your website, a suggested webinar that you might duplicate with your own person doing the presentation, of course, to go on your website. There's a suggested news release that you could send to your local media, communicating with the marketplace that you are a proactive firm of accountants. There's templates to prepare the quotation and proposals to go to your clients. There's the eligibility matrix, which I referred to earlier, which will help you to identify some of those clients who might be really interested in this whole process, but you might have to have a conversation with them. That's why we're suggesting you invite them to a seminar. Incidentally, we have the full planning for the seminar as part of the package. So Basically, all you need to do is read it beforehand and then present it. The PowerPoint slides are there. The handouts are prepared. All you've got to do is put your brand on top of them. You can edit the material if you wish. We've got a whole process going through how you prepare a crowdsourced funding offer document. We've got material there so that the directors of the companies you're dealing with can have a clear understanding of the duties, roles, and powers of the crowdsourced funding intermediaries. And then there's a whole new process starts as soon as the capital's been raised, because all the intermediary does is sends your client an email saying, we have closed the offer, the minimum subscription has been reached. You raised $500,000. Our fee was 8%, so $40,000. We've deducted that, and we have transferred today $460,000 into your bank account. So then the fun begins, doesn't it? The company has to produce the share certificates. They've got to get signed. The communication process needs to be agreed upon. Perhaps the new board of directors needs to have its first meeting. And hopefully the company can then trade successfully. And that's the stage where, if you haven't already raised it, I'd be talking to the directors about a virtual chief financial officer service. So the product package that we have prepared, which can be subscribed to as a standalone individual product package with everything that we've referred to today and a whole lot more, your subscription, your investment is $999, including GST. Or it is part of our silver package, or our gold package. So it's part of both of those packages. So you can subscribe to the silver package for $2,189 or the gold package for $2,970, including GST, which obviously includes the crowdsourced funding product package. Let me emphasize, you don't need a special license to undertake this work. The intermediaries have got the licenses, and there's only a very small number of them. This opportunity is for accountants where you do not need a special license, unlike financial planning. I accept it's not for everyone. Not every accountant in Australia is going to want to do this work, but I hope you do. This is your opportunity to seize the significant uniqueness for your firm, which will help your clients, which will help your team, because they'll feel as if they're doing real accounting work. And it will help your firm because you will have created a new income stream and have positioned yourself in the marketplace as a real commercial advisory firm. If you want to have a further discussion, don't hesitate to give me a telephone call. There's the numbers. Or send me an email, peter@essbiztools.com.au, and I will get back to you. If you want to look at our websites, please go to www.essbiztools.com.au. And I didn't promote this too good. That's where you've got to go to if you want to subscribe. And click on crowdsource funding. If you want to have a look at our other product, which is associated with ESS BizTools, that's ESS BizGrants. There's the website for ESS BizGrants also. So thank you very much for participating in this webinar today. I hope I've answered your questions about crowdsource funding. And I really do hope that you will join us on this exciting journey of helping thousands of companies around Australia start the journey towards raising capital. Have a great day. Goodbye.